General risk disclosure. Trading financial instruments, including forex, futures, equities, commodities, and cryptocurrencies, involves significant risk of loss. Trading is not suitable for all investors, as it may result in the loss of your entire investment. Leverage, volatility, and liquidity risks are inherent in these markets. Before engaging in trading, carefully consider your financial situation, experience level, and risk tolerance. You should only invest money you can afford to lose. Forex and futures disclaimer. Trading in the forex and futures markets is highly speculative and carries a substantial risk of loss. The leverage nature of these instruments amplifies gains and losses, potentially leading to substantial financial exposure. This content complies with CFTC Rule 4.41. CFTC Rule 4.41 disclaimer. Hypothetical or simulated performance results have certain inherent limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have under or overcompensated for the impact, if any, of certain market factors, such as lack of liquidity. Simulated trading programs are also subject to the fact that they are designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profits or losses similar to those shown. Equities and commodities disclaimer. Equity and commodity trading involves risks associated with market volatility, company-specific factors, and geopolitical events. While stocks and commodities may have a lower leverage factor compared to forex or futures, they can still result in substantial financial losses. Cryptocurrency disclaimer. Cryptocurrencies are speculative and highly volatile instruments. Trading cryptocurrencies involves additional risks, including regulatory uncertainties, security vulnerabilities, and lack of liquidity. Cryptocurrencies are not regulated by most governments or central banks, and their value may be affected by external factors such as news events and market sentiment. Regulatory references. In the United States, this content adheres to the regulatory standards of the Commodity Futures Trading Commission, National Futures Association, and Securities and Exchange Commission. In the European Union, trading practices comply with the European Securities and Markets Authority standards. Global compliance, content aligns with internationally accepted guidelines, but laws vary by jurisdiction. Consult with a licensed professional in your area. Past performance disclaimer. Past performance is not indicative of future results. Any historical results or performance shown in this content are for informational purposes only and do not guarantee future performance. Educational content disclaimer. The information provided in this video is for educational and informational purposes only. It is not intended as investment advice, nor should it be construed as a recommendation to buy, sell, or hold any financial instrument. Always consult with a licensed financial advisor or regulatory authority in your jurisdiction before engaging in trading activities.
All right. Knock out this work. February week 3. And today's Wednesday. 2/18/26. Let's do the midweek one. Two 18/26. Confirm or revise the anchor point status. So let's go here. I want to say, this could be the high of the week, but this looks like a week high. Or it looks like relative equal high. We closed, we hit Friday's high and we went back below it. I mean, this really could be it though. We just don't have no sign, and we didn't get no displacement. So yeah, this don't look like it. We need to really close below this low. Tuesday for sure looks like the low. Even if we do come down here for Thursday, we're gonna need a catalyst to push us all the way like down. Tomorrow's unemployment. Oh snap, what I done clicked on. Just Take a look at SPY. This one looks a little bit better. It didn't leave the tacky high. I'll be watching this. 50% of previous week's range. That's going to be interesting. And what is the news for tomorrow? Unemployment. Okay. It's pretty good because unemployment's going to be important. GDP and PMI on Friday. On Tuesday, low of the week. And Tuesday looks like it'll hold. I don't even really think it's. I don't see no more objectives. The only other objective would be, what's this? This will be a monthly level, I'm guessing. Week 1. Yeah, it'll have to do that. Is previous week's high possible for like a target? Yeah. Any type of bounce retracement under this low will be okay. We already got the retracement objective. Let's take out the words in this. That high is still weak. That can stay Friday's high. That's important. Let's make this blue or something. Okay. This is interesting to buy from. What would be price showing me that it just wants to sell? It doesn't care. Like closing below here for tracing and not creating another high. So lower highs below Friday. Y'all can stay bearish. The most logical play would be to squeeze out some more buys, just on how this delivery looks. weekly bias template. Soft bias. Case can be made. Bullish and bearish midweek. This imbalance is rejecting. No shift in framework hit rate. Market's moving. Some options expiry. So much big moves. But we still not going nowhere. I'll leave in this range. Doing good. 2 case studies. Done. Time and bias alignment. Week 1, week 2. Yeah, this is a week high. I would want to see. I want to see another run up and a sell below this. Honestly. Week 3. Could seek week 1 liquidity and allow week 4 to create the wick of the month. Because right now, the only week that built the monthly candle is week 1. Expansion, mitigation signals. I do like the reaction of the volume imbalance here that needed to buy side, but it left these equal highs. It's not a strong move. This high and this low don't look good. Yeah, I kind of like here first, just to clean this up. We need some type of long spike like this. Price retraced after taking a sell side liquidity. Boom, retraced. After CSD, we need speed for bearish continuation. Student quality's been good. Narrative framework and accuracy. Looking for a environment. Hold on, I say enjoyment. Bam. Experience success. Say staying locked in. Case study, vol reference, daily profiles. Okay. Let's knock out the Wednesday stuff now. Definitely not a smooth price action day. But can we say, oh, this is a manipulation? I guess you could say it's an expansion. It's really 3 drives. Engage, medium. Everything is looking for. So far, the anchor point is Tuesday. We're expecting Tuesday to hold. And yes, expansion is playing out. And we did tolerance. Because all we really wanted was that retracement objective. And we left it, which was beautiful. But how we left it has me thinking like, all right, that's not the top. We wouldn't have left a high that's that tacky. Yeah, it's just too weak. Let me just see. What is this? So I don't know what that is. Okay. Okay, I know about this. No. This is December's low. Okay. So now let's go here. We keep touching December's low. December's low is the worst low in the history of lows. Close, 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 close. And I still got it up as a reference. Let me take it off. Yeah. So I'm watching this week high. Friday's high from last week. This is just previous day high for no reason. We can pop a little here. Nice drop by here. And we really could be done because we had 2 deviations here. I would watch if we create another fairy swing because that could be double purge model. It's expanded. Retracement objective. It looks like we just as a mile marker. If we close bill value for Friday, then tomorrow will be a bullish day. Boom. Mm, mm. No, the rejection of the breakaway gap, but the reaction did not create a fair value gap. And every fair value gap that works creates a fair value gap reaction off of it. Okay. Mm, we'll just leave this only on this time frame. Yeah, still in here, but we're in premium now, so we're gonna start looking for sales. Selling above here is the most ideal, especially if news comes in and it's bearish. I don't know what tried to push it up today, but it was the worst move we can push up. Stay high, following the food objective. Let's look at SPX. Okay, looks like the fair value gap worked over here. Seems a little more choppy, but the main idea is the same. Mm, Yeah, I really don't trust. Let me take off this old target. And look at these. It's just so many gaps and stuff up here. Price is grinding higher, but the order flow is not supporting. It's not supporting the buys or the bears this week. Hmm. So far, each move up is completely erased shortly after. If you swing trading, you exhausted. Lord. Hmm. This is cool. No, we swept this like this, but yeah, same thing here. See if we can look for buys, and the sale should happen above Wednesday. Think higher, sales above Wednesday high. Think higher overnight, then sales above Wednesday high. For New York AM session. Yeah. Mm, Stay locked in. Watch for tomorrow. I think it's 8:30 news. Yeah, pin the home sales. 8:30 unemployment. 10 a.m. home sales.